Welcome to the Opening Bell Report.
$60 billion.
Yeah, it is. It's the kind of figure that literally stops you in your tracks.
Absolutely. We are looking at the announcement of this massive alliance between AMD and Meta today. And I really want to set the stage properly for you here because the headlines are obviously focusing on that huge price tag. But the analysis report we have in front of us paints a much more complex picture.
Right.
This isn't just a purchase order.
Far from it. I mean, if you treat this as just a standard transaction like Meta buying a bunch of chips from AMD, you are completely missing the structural shift happening underneath.
Yeah.
This is a declaration of intent. It is arguably the exact moment the industry officially moves away from a monopoly mindset to a true dual ecosystem reality.
The whole NVIDIA or nothing era is effectively ending today.
That is exactly the signal. We are looking at an analysis of what they are calling the infrastructure alliance. And the specifics in this report, the hardware scale, the financial engineering, the equity stakes, it suggests this is about supply chain sovereignty just as much as it is about raw compute power.
Right, so let's get into the actual structure of this deep dive because we have three distinct pillars to cover for you. We need to talk about the hardware itself specifically. This 6 gigawatts commitment, which is a unit of measurement we definitely need to unpack.
Yes, we do.
Then we need to look at the custom silicon and the Helios architecture.
And we definitely need to spend some time on the financial side, too. The warrants, the way this deal is actually funded is incredibly creative.
Agreed. The chips for stock component is something I just haven't seen at this kind of scale before. But let's start with the physical reality of this deal. The report estimates the total value at $60 billion over 5 years.
Right.
But the commitment isn't listed in unit volume of chips. It is listed in power.
And that right there is the fundamental shift we've been seeing for the last couple of years. But this deal really codifies it. Meta has committed to deploying up to 6 gigawatts of AMD-powered AI infrastructure.
Which is just a crazy number.
To put that in perspective, for anyone you know not living inside a data center, 6 gigawatts is roughly the electrical output of 5 or 6 full-scale nuclear reactors.
It is a staggering amount of energy.
It is city-scale power. And in this context, every single watt of that power is dedicated solely to training and running advanced AI models.
Wow.
When you operate at that massive scale, you stop counting individual chips entirely. You stop caring about how many GPUs you can fit in a single box.
Right, because it becomes an infrastructure problem.
Exactly. You care about power density, you care about performance per watt, because electricity is your biggest bottleneck and your biggest ongoing cost.
Which perfectly explains why the report emphasizes that these aren't off-the-shelf parts. Meta isn't just buying standard AMD Instinct accelerators.
No, they are not.
They are buying a completely custom SKU based on AMD's upcoming MI450 architecture.
Exactly. This is really the difference between buying a suit off the rack and having one bespoke tailored for you. The MI450 architecture is the base foundation, but Meta and AMD have collaborated to essentially strip out all the silicon they simply don't need.
They are tailoring the silicon for very specific workloads.
Right. Just think about Meta's specific needs as a company. They aren't just a general cloud provider renting out space to random startups doing all sorts of different compute tasks.
No, they have very focused applications.
Right. They run massive llama training clusters. They run these gigantic recommendation engines for Instagram and Facebook feeds. So they have very specific matrix math requirements.
So the logic there is if you know exactly what math you are doing, you can just physically remove the logic gates on the chip that don't serve that specific purpose.
Precisely. And when you are deploying 6 gigawatts of these things, stripping out even, say, 5% of the wasted silicon area, or heavily optimizing the voltage regulation for your specific use case, that saves you hundreds of millions of dollars in electricity over the life cycle of that hardware.
It is efficiency at a completely unprecedented scale. The report also highlights that this hardware strategy goes way beyond just the chip itself.
Yeah, the system level is where it gets really interesting.
Right. They mentioned the Helios rack scale architecture. This seems to be where the long partnership history between these two companies really starts to pay off.
It absolutely does. You have to remember, AMD and Meta have been collaborating in the Open Compute project for years now.
OCP.
Right, OCP. Helios is basically the culmination of all that shared engineering. It isn't just a server blade that you slide into a standard rack. It is the entire rack integration from top to bottom.
The plumbing, essentially.
Exactly, the plumbing, the liquid cooling systems, the power delivery, the high-speed networking interconnects between the nodes.
Because you can't just throw these parts into an old server room.
No, you absolutely cannot simply plug a multi-kilowatt class GPU into a standard enterprise server rack. The heat density is just way too high. It would literally melt. Helios is designed as a modular standard.
Meaning they can just drop them in as full units.
Yes, you can essentially snap these fully integrated racks together, like building blocks, to build out those massive gigawatt-scale clusters we were just talking about.
It solves the entire integration headache for them. Meta doesn't have to spend years figuring out how to cool these specific chips because the architecture is co-designed to perfectly fit their existing modern data center footprints.
And crucially, it locks in the standard. Once you build your data center infrastructure around the Helios architecture, you are effectively committed to that physical form factor for a long time.
There is actually another hardware detail in the analysis report here that I think is crucial for AMD's bottom line. The deal also includes CPUs.
Yes.
The report says Meta is the lead customer for AMD's 6th-generation EPYC processors.
The ones codenamed Venice and Verano.
Right. And this seems highly significant to me because often we see these big AI clusters using a competitor CPU or maybe even an ARM-based custom in-house CPU just to manage the GPUs.
Winning the CPU socket is a major strategic victory for AMD here, without a doubt.
Why is that socket so critical?
Well, in an AI server, the GPU obviously does the heavy lifting for the actual AI math, but the CPU is still the brain of the node. It runs the operating system, it manages the network data flow, and it handles all the general compute tasks required to feed the GPUs.
Got it.
By putting those EPYC Venice chips into these racks, AMD successfully secures the entire node.
It is a red team data center from top to bottom.
That's a great way to put it, and it vastly simplifies the support matrix for Meta.
How so?
If you hit a massive bottleneck in your training run, you don't have Intel blaming NVIDIA, who then turns around and blames the network card manufacturer. You literally have one single vendor to call.
AMD.
Right, AMD. It signifies a massive level of trust that Meta is placing in AMD's full stack capability, not just their raw accelerator speed.
Okay, so we have the hardware reality clearly mapped out. 6 gigawatts of custom-tailored MI450s and Venice CPUs, all integrated into the modular Helios OCP architecture. Rollout expected to begin in the second half of 2026.
Right.
That perfectly explains the what of this alliance, but we really need to pivot to the how, because the financial structuring of this deal, detailed in the report, is frankly fascinating to me.
It is financial engineering in the truest, most literal sense of the term.
The analysis report details a performance-based warrant. Now, for anyone listening who isn't deep in corporate finance, this effectively gives Meta the legal right to buy AMD stock in the future. But the actual terms are, well, they are aggressive.
Aggressive is certainly one word for it. Strategic is another.
Yeah.
AMD has essentially issued Meta a warrant to purchase up to 160 million shares of AMD common stock.
Which, just doing the math, is roughly 10% of the entire company.
Correct. 10% ownership. And the strike price, which is the price Meta actually pays to exercise that option and buy the shares, is exactly 1 cent.
$0.01.
Right.
1 penny per share.
Yes. So on the absolute surface level, it looks like AMD is just giving away 10% of their multi-billion-dollar company for practically free.
Which, under normal circumstances, would cause an absolute shareholder revolt on Wall Street.
Oh, it definitely would if there weren't some very serious strings attached to this deal. And the strings are thick steel cables in this case.
Right. Meta doesn't just get this stock handed to them today.
No, not at all. They have to earn it through two very specific, very difficult mechanisms.
The vesting milestones. Let's walk through those.
First is the physical deployment. The vesting schedule for these shares doesn't even begin to tick until Meta takes physical delivery and successfully powers on the first 1 gigawatt of compute.
Ah, okay. So this completely prevents them from just signing the deal to freeze the market or block a competitor from getting those chips and then never actually building the data centers.
Exactly. They have to actually build the physical infrastructure and turn it on. But the second condition is where the financial incentives really perfectly align.
Tell me about the second condition.
To unlock the final, most lucrative tranches of those 160 million shares, AMD's public stock price has to actually hit specific high-end targets.
And the report cites a top-end target of $600 per share.
$600. So just consider the underlying math here for a second.
Okay.
If Meta deploys all the hardware and they help the AMD ecosystem thrive to the point where the public stock hits $600, that warrant package they hold is suddenly worth roughly $96 billion.
Okay, let's just pause on that number. They are paying an estimated $60 billion in cash for the actual hardware over the next 5 years.
Right.
But if the stock hits the target, they stand to make $96 billion on the equity alone.
Theoretically, yes. If they execute perfectly on this deployment, the equity appreciation actually entirely pays for the hardware itself and then generates an additional $36 billion profit right on top of it.
It's vendor financing, completely turned on its head. Instead of AMD financing Meta, the global stock market is essentially financing the deal.
It perfectly aligns the incentives of both giant companies. Usually in a supplier-buyer relationship, it is strictly a zero-sum game.
Right. I want to sell high, you want to buy low.
Exactly. But here, Meta is highly financially incentivized to make sure AMD actually wins in the broader market. They literally need AMD to be perceived by everyone as a clear market leader.
They need the AMD ecosystem to be incredibly robust.
So because if AMD just stays stagnant or falls behind, those warrants are barely worth a fraction of their maximum potential.
It turns a standard customer into a highly motivated partner.
Meta is now effectively the single largest cheerleader for AMD in the entire world because they have nearly 100 billion reasons to be exactly that.
It honestly reminds me of the deals Amazon used to cut with some of its key suppliers years ago, taking equity warrants in exchange for massive guaranteed volume. But the sheer scale here, $60 billion, is just unprecedented in the semiconductor space.
It is the only real way to break an entrenched monopoly. You can't just show up and offer a slightly cheaper or slightly faster chip.
It's not enough.
No, you have to offer a total business model innovation. AMD CEO Lisa Su is essentially telling Mark Zuckerberg, we will give you massive ownership in the platform itself, but only if you help us build it into the industry standard.
Speaking of breaking the monopoly, let's look at the broader market impact, which is our third pillar. The report draws a very clear comparison to the massive OpenAI deal from late 2025.
Yes, what some of the Wall Street analysts are now calling the Lisa Su playbook.
Right, we saw a very similar multi-gigawatt commitment with OpenAI just last year. And now we have Meta doing essentially the same thing.
It firmly establishes a repeatable pattern. AMD isn't trying to win over every single mid-market customer right now. They are out hunting the absolute biggest whales.
The hyperscalers.
Exactly. They have now locked in the leading AI startup with OpenAI and the leading social AI giant with Meta using these massive, long-term, highly creative contracts.
It creates a coalition.
It creates a federation of sorts. You have the proprietary NVIDIA ecosystem, which is obviously incredibly powerful and massively profitable. And now, right alongside it, you have a fully validated, well-funded, alternative ecosystem populated by literally the biggest spenders in the entire industry.
And that concept of validation is really key here. Because when a company like Meta commits gigawatts of power to a specific chip, it decisively answers the question, is the hardware actually good enough?
It entirely retires the technical risk for everyone else. You simply do not deploy 6 gigawatts of power on a science experiment.
No, you definitely do not.
You only do it on rock-solid production-grade silicon. This sends a massive signal to the rest of the market. The enterprise customers, the smaller cloud providers, it tells them that AMD's supply chain can actually deliver the volume and that the silicon works at scale.
Let's talk about Wall Street's immediate reaction to this. Because usually when you talk about stock dilution, it is a dirty word in finance. You tell investors you're going to be printing 160 million brand new shares, and normally the stock just tanks.
Right.
But looking at the charts today, AMD is up almost 10%, breaking through major resistance levels on massive volume.
That is the real nuance of institutional investing. Wall Street, frankly, hates uncertainty much more than it hates dilution.
Interesting.
Before this deal was announced, the standard bear case on AMD was always sure they have a really good chip, but will they actually be able to sell enough of them to justify this massive valuation?
The demand uncertainty.
Exactly. Will customers actually switch? This deal completely removes that specific uncertainty. We now have rock-solid contractual visibility into tens of billions of dollars of revenue stretching all the way through 2030.
It totally de-risks the entire growth story.
Investors are more than willing to accept a slightly smaller 10% slice of a pie if they know that pie is going to be vastly bigger and much more certain.
It permanently anchors the long-term revenue model.
It anchors the model, and it fundamentally creates a hard floor for the stock price. And remember, the dilution itself is totally contingent. If the stock doesn't actually go up over time, those upper tranche shares aren't ever fully issued.
It is a brilliant self-correcting mechanism.
Yeah.
There is one more layer to this analysis report that I actually think is the most impactful long-term takeaway, and it is the software angle. We focused a lot on the hardware and the money, but Meta is fundamentally a software company at its core.
They are the primary stewards of PyTorch.
Exactly. PyTorch is the absolute standard library for AI development right now. And for years, the major knock on AMD has always been great hardware, but the software stack ROCm just isn't nearly as mature or easy to use as NVIDIA's CUDA.
That software friction has been the primary moat protecting NVIDIA's dominance.
So now you have the exact company that builds and maintains PyTorch owning potentially 10% of AMD.
You immediately see the profound implication there. If you are Mark Zuckerberg and you absolutely need AMD stock to hit $600 to vest your tens of billions of dollars in warrants, you are going to completely reallocate your internal engineering resources.
You're going to make absolutely sure that PyTorch sings on AMD silicon.
You are going to ruthlessly optimize every single kernel, every compiler and every core library to run natively and incredibly efficiently on the MI450 architecture. Meta currently employs some of the absolute best AI infrastructure engineers in the world.
And they are now effectively working for AMD's software ecosystem.
That effectively fills the moat with solid concrete. If Meta heavily optimizes PyTorch specifically for AMD hardware, that huge benefit naturally trickles down to every single startup, every academic researcher, and every college student who uses PyTorch.
The default out-of-the-box experience on AMD hardware improves dramatically, literally overnight.
It creates a new open standard, and that is so much harder for a competitor to fight than just releasing a slightly faster chip. If the software friction entirely disappears, then the raw hardware-priced performance advantage becomes the only metric that actually matters to buyers.
It is a massive convergence of custom hardware, aggressive finance, and open source code. It really does feel like we are seeing the true maturation of the AI infrastructure market today. It is moving from that wild, wild west gold rush phase into a heavy industrial phase.
That is a really good analogy. In the initial gold rush, you just buy absolutely whatever shovel you can get your hands on, regardless of price.
Right.
But in the industrial phase, you start building deep structural partnerships to manufacture your own massive excavators. This deal is the true industrialization of AI compute.
So looking ahead for you listening, what should we all be watching for next? We have the huge announcement today, but obviously execution over the next 5 years is absolutely everything.
We need to closely watch the physical deployment timeline. The report clearly mentions the second half of 2026 for the initial hardware rollout. Any slippage or delays there will be scrutinized incredibly heavily by the market.
And we also need to watch those specific vesting milestones we talked about.
Right. Watch for the official announcement of that first 1 gigawatt physical deployment. That is the actual firing of the starting gun for the equity transfers. And of course, you should really watch the GitHub repositories.
The GitHub repositories.
Yes, absolutely. See if the direct code commit frequency from Meta software engineers into the AMD ROCm codebase starts to aggressively spike.
Oh, that is interesting.
That will be the single best leading indicator of how deadly serious this deep partnership really is on a day-to-day engineering level.
That is a fantastic specific detail to keep an eye on. It is so easy to get completely lost in the $60 billion in the gigawatts, but the actual open source code commits might tell the real story of this alliance.
The code is what ultimately creates the lasting value. The billions of dollars just follow it.
Well, this has been a really substantial look at what is clearly the defining tech deal of the year so far. We've gone from the massive gigawatts of power to the clever penny stock warrants, and finally to that potential massive shift in the software ecosystem.
It is a genuinely fascinating time to be closely watching the Silicon Wars.
It certainly is. We will definitely keep tracking those deployment milestones and those code commits as they happen over the next year. Thanks so much for breaking down this complex analysis report with us today.
My pleasure, anytime.
And for everyone listening, keeping track of this space, keep your eyes on the power grid and your eyes on the code. We will catch you on the next deep dive.
Don't forget to like, share, and subscribe for more.